Exchange competition in Asia in the next 3 to 5 years, I think, is going to evolve in many different ways and many different forms. I think that we already started to see some of that in response in Australia when there was first signs of competition there. There was responses from the ASX where they drove down their physical cost of trading for the participants. I think we'll see it in responses like we saw with ASX and SGX, talking about a merger. Now, whether that goes through or not, I think we won't see the end of that type of response, whether it's ASX and SGX or some other exchanges looking to get together. And I think they might do that for economies of scale, to be able to share technology, share platforms, etc. I think we've seen and will continue to see investment in technology from the exchanges. I think they're competing with each other and perhaps competing for global business. And to do that, one needs to be at the forefront of technology. We've seen the last couple of years the Tokyo Stock Exchange invest a lot of money into their platform, and it's paid dividends. They've really increased the potential of that market and brought in a lot more trading as a result, and a lot more innovative trading as a result. We saw Malaysia a few years ago really invest heavily in their technology. I think the other area, and we've seen in Australia, for example, is in order types. So as a response, the exchanges are being more innovative in their order types that they're offering their participants. And even with the SGX joining up with or providing a dark pool with Chi-East, that's innovation in its own right. So there's many different ways of responding to competition. I think competition is healthy. Competition has already driven down the cost of trading at the physical level of the exchange. I think that's going to continue. And the exchange's response will be on different levels. It will be on, as I say, perhaps joint ventures, mergers, clearly are more likely to be in a response of trade types, and very clearly in a response of driving down the cost of trading and dealing on each particular exchange. And that's healthy. That's healthy for the industry because it means we have a much more efficient industry, and that's good for trading entities, but more importantly, it's very good for the investor, and we want investors to feel that they can invest in confidence and get economies of scale, efficiencies of investment.